Question 1. Understanding term life insurance provisions. Which of the following statements accurately describes a characteristic of level term life insurance? A. It provides a death benefit that decreases over time as premiums are paid. B. It offers a fixed premium and a consistent death benefit throughout the policy term. C. It allows for easy conversion to a whole life policy without requiring evidence of insurability. D. It has a variable premium that can change annually based on the insured's age. Answer: B. It offers a fixed premium and a consistent death benefit throughout the policy term. Explanation: Level term life insurance is designed to provide a death benefit that remains constant throughout the duration of the policy, which is typically for a specified number of years. This type of policy contrasts with decreasing term insurance where the death benefit diminishes over time. The fixed premium also ensures predictability for policyholders, making it easier for them to budget their expenses. Additionally, while many level term policies may offer conversion options, the defining feature is the consistent death benefit and premium. Question 2. Scenario-based understanding of underwriting. Mr. Davis is applying for a term life insurance policy. During the underwriting process, he discloses that he recently had a surgery to repair a hernia and that he has a family history of heart disease. What factor is most likely to influence the underwriting decision regarding Mr. Davis's application? A. His age at the time of application. B. The specific details of his surgical procedure and recovery. C. The average health status of the population in Alabama. D. The total amount of insurance he is applying for. Answer: B. The specific details of his surgical procedure and recovery. Explanation: In the underwriting process, the insurer assesses the risk posed by the applicant, which includes reviewing medical history and any significant health issues. Mr. Davis's recent surgery and his family history of heart disease are crucial pieces of information. Underwriters will consider not only the fact of his surgery, but also its severity, the success of the procedure, and his current health status post-surgery. Age option A and the amount of insurance option D are also factors, but they are secondary to the applicant's specific health conditions. The average health status of the population option C is less relevant than individual risk factors. Question 3. Implications of taxation on death benefits. Which of the following statements regarding the taxation of life insurance death benefits is true? A. Death benefits are subject to federal income tax if the policyholder paid the premiums with pre-tax dollars. B. Death benefits are generally exempt from federal income tax regardless of how the premiums were paid. C. If the insured's estate is the beneficiary, the death benefit will be subject to estate taxes only if it exceeds $1 million. D. Death benefits are taxed at the ordinary income tax rate for the beneficiary. Answer: B. Death benefits are generally exempt from federal income tax regardless of how the premiums were paid. Explanation: Under current federal tax law, death benefits from a life insurance policy are typically exempt from federal income tax. This applies irrespective of whether the premiums were paid with after-tax or pre-tax dollars. However, if the policyholder's estate is the beneficiary, the death benefit may be included in the taxable estate, which could subject it to estate taxes, depending on the overall value of the estate. The option regarding a $1 million threshold is incorrect, as there is no specific exemption threshold related to death benefits. Estate tax laws can be more complex. Death benefits are not taxed at ordinary income rates, making option D incorrect as well. Question 4. Policy provisions understanding. Which of the following provisions in a term life insurance policy allows the policyholder to maintain coverage after the initial term expires? A. Grace period. B. Renewable option. C. Accidental death benefit. D. Non-forfeiture option. Answer: B. Renewable option. Explanation: The renewable option in a term life insurance policy allows the policyholder to extend the coverage for an additional term without having to provide evidence of insurability. This is particularly beneficial for those who may have developed health issues during the original term. The grace period option A is a time frame that allows the policyholder to pay overdue premiums without losing coverage. Accidental death benefits option C are additional benefits in case of death by accident, while non-forfeiture options option D are primarily associated with permanent life insurance policies, providing benefits if the policy is cancelled. Question 5. Risk assessment factors. When underwriting a term life insurance policy, which of the following factors would be considered most significant in classifying the risk of an applicant? A. The applicant's occupation. B. The applicant's educational background. C. The applicant's personal interests and hobbies. D. The applicant's social media presence. Answer A. The applicant's occupation. Explanation. The applicant's occupation is a crucial factor in risk classification because certain jobs carry higher risks than others. For example, occupations in construction or law enforcement may present greater risks than office jobs, while hobbies, option C, can also affect risk, particularly high-risk activities like skydiving. Occupation typically has a more direct impact on the underwriting decision. Educational background, option B, and social media presence, option D, are generally less relevant in assessing risk for life insurance. Question 6. Claims process specifics. If a beneficiary files a claim on a term life insurance policy, which of the following documents is least likely to be required during the claims process? A. Death certificate of the insured. B. Original policy document. C. Proof of the beneficiary's identity. D. The insured's employment history. Answer D. The insured's employment history. Explanation. During the claims process, the insurer typically requires a death certificate, option A, to confirm the death of the insured, the original policy document, option B, to verify the terms of coverage and proof of the beneficiary's identity, option C, to ensure the correct payout. The insured's employment history, option D, is generally not relevant to the claims process unless it pertains to specific circumstances of the death, such as in the case of accidental death, claims related to job activities. Question 7. Understanding riders and endorsements. Which of the following riders provides additional coverage for the insured's children under a term life insurance policy? A. Waiver of premium rider. B. Child rider. C. Accidental death benefit rider. D. Level term rider. Answer B. Child rider. Explanation. The child rider allows the policyholder to add coverage for their children, providing a death benefit in the event of the child's death. This rider is often available at a lower premium than separate policies for each child. The waiver of premium rider, option A, allows the policyholder to stop paying premiums if they become disabled. The accidental death benefit rider, option C, provides an additional benefit if the insured dies in an accident. The level term rider, option D, does not exist as a distinct rider. It refers to the type of term insurance itself, not an additional feature. Question 8. Taxation implications. In which scenario might a life insurance death benefit be included in the insured's taxable estate? A. The beneficiary is the spouse. B. The insured is the owner of the policy. C. The policy has a cash value component. D. The death benefit exceeds $5 million. Answer B. The insured is the owner of the policy. Explanation. If the insured is also the owner of the policy, the death benefit will typically be included in their taxable estate, regardless of the beneficiary designation, option A. The cash value component, option C, is relevant for permanent life insurance, not term life insurance, and while high death benefits, option D, may have estate tax implications, there isn't a specific threshold that universally applies to life insurance policies. Therefore, the correct condition is that ownership of the policy by the insured can lead to inclusion in the taxable estate. Question 9. Ethical selling practices. Which of the following practices would most likely violate ethical standards in selling life insurance? A. Providing complete and accurate information about policy features. B. Exaggerating the benefits of a policy to close a sale. C. Assisting clients in identifying their insurance needs. D. Disclosing all relevant fees and charges associated with the policy. Answer B. Exaggerating the benefits of a policy to close a sale. Explanation. Exaggerating the benefits of a policy to make a sale is unethical and potentially deceptive. Insurance agents must provide complete and accurate information, option A, and help clients assess their needs, option C. Full disclosure of fees and charges, option D, is also essential for ethical selling practices. Ethical behavior is crucial in maintaining consumer trust and ensuring informed decision-making. Question 10. Characteristics of term insurance. Which of the following statements is true regarding the flexibility of term life insurance? A. Term life insurance always includes a cash value component. B. Policies can often be converted to permanent insurance without additional underwriting. C. The premium is guaranteed to remain the same for the entire life of the policy. D. Term life insurance typically has complex features and provisions that complicate its understanding. Answer B. Policies can often be converted to permanent insurance without additional underwriting. Explanation. Many term life insurance policies include a conversion option that allows the policyholder to convert the term policy to a permanent life insurance policy without needing to provide evidence of insurability. This is a significant feature that adds flexibility. Options A, C, and D are incorrect. Term life insurance does not build cash value. A. Premiums are fixed only for the term duration and may increase upon renewal. C. And term insurance is generally simpler in structure compared to permanent life insurance products. D. Question 11. Premium calculation factors. Which factor is the least influential when determining the premium rate for a term life insurance policy? A. The applicant's age. B. The applicant's health history. C. The applicant's driving record. D. The applicant's marital status. Answer: D. The applicant's marital status. Explanation: while marital status, option D, can have some impact on lifestyle considerations, it is generally less influential in determining premium rates compared to age, option A, health history, option B, and driving record, option C. Age is a significant factor because mortality risk increases with age, and health history is critical for assessing risk levels. Her poor driving record may indicate higher risk due to potential accidents, thus influencing premium calculations. Question 12. Claim settlement options. Which of the following settlement options provides the beneficiary with a fixed amount of money over a specified period until the total death benefit is exhausted? A. Lump sum payment. B. Life income option. C. Fixed period option. D. Interest only option. Answer: C. Fixed period option. Explanation: the fixed period option allows the beneficiary to receive payments for a specified number of years, at which point the total death benefit is exhausted. In contrast, a lump sum payment, option A, provides the full amount immediately. The life income option, option B, pays an income for the lifetime of the beneficiary, and the interest only option, option D, pays only the interest earned on the death benefit, with the principal remaining until later distribution. Question 13. Understanding policy riders. Which of the following riders provides coverage for the insured in the event they become totally disabled, allowing them to avoid paying premiums? A. Waiver of premium rider. B. Accidental death benefit rider. C. Child rider. D. Guaranteed insurability rider. Answer: A. Waiver of premium rider. Explanation: the waiver of premium rider allows policyholders to stop paying premiums if they become totally disabled, ensuring that their insurance coverage remains in force during their disability. The accidental death benefit rider, option B, adds coverage in the event of death by accident. The child rider, option C, provides coverage for children, and the guaranteed insurability rider, option D, allows the policyholder to purchase additional coverage without further medical underwriting. Question 14. Term insurance conversion. If a term life insurance policy has a conversion feature, what is the primary advantage to the policyholder? A. Low premiums upon conversion. B. Guaranteed coverage without a medical exam. C. Increased cash value accumulation. D. Extended coverage duration indefinitely. Answer: B. Guaranteed coverage without a medical exam. Explanation: the conversion feature allows policyholders to convert their term policy to a permanent one without undergoing further medical underwriting, which is a significant advantage if their health has declined. While premiums may increase upon conversion, option A, cash value accumulation, option C, is not applicable to term insurance, and conversion does not guarantee indefinite coverage duration. Option D, it allows for the change from term to permanent insurance only. Question 15. Ethical selling standards. In which of the following situations would a life insurance agent most likely breach ethical selling standards? A. Advising a client to purchase term insurance when it fits their needs best. B. Failing to disclose a known medical condition of the applicant during underwriting. C. Providing a thorough comparison of policy features to a client. D. Following up with a client after the sale to ensure satisfaction. Answer: B. Failing to disclose a known medical condition of the applicant during underwriting. Explanation: failing to disclose a known medical condition, option B, is a clear breach of ethical standards and can be considered insurance fraud, as it affects the underwriting process. Advising a client based on their needs, option A, providing thorough comparisons, option C, and following up for satisfaction, option D, are all ethical practices that enhance the client-agent relationship and ensure transparency. Question 16. Risk classification categories. In the context of underwriting, which of the following classifications typically indicates the lowest risk level for A term life insurance applicant: A. Substandard risk, B. Standard risk, C. Preferred risk, D. Declined risk. Answer: C. Preferred risk. Explanation: Preferred risk classification, option C, is reserved for applicants who represent the lowest risk due to favorable health conditions and lifestyle choices. Standard risk, option B, represents average risk, while substandard risk, option A, indicates high risk, often resulting in higher premiums. Declined risk, option D, refers to applicants who do not qualify for coverage due to significant health or lifestyle issues. Question 17. Market analysis. Which of the following best describes the primary purpose of conducting a needs analysis for a potential life insurance client? A. To determine the applicant's eligibility for coverage. B. To identify the insurance company's commission structure. C. To assess the financial impact of the client's death on dependents. D. To evaluate the effectiveness of the insurance company's marketing strategies. Answer: C. To assess the financial impact of the client's death on dependents. Explanation: A needs analysis, option C, aims to identify the financial requirements that would arise from the client's death, ensuring that dependents are adequately protected. Determining eligibility for coverage, option A, is part of the underwriting process, and understanding the commission structure, option B, does not directly benefit the client. Evaluating marketing strategies, option D, is not relevant to individual client needs. Question 18. Term life insurance benefits. Which of the following is not a characteristic of term life insurance? A. Death benefits are paid only if the insured dies during the term. B. It builds cash value over time. C. It typically offers low premiums compared to permanent insurance. D. Coverage can be renewed or converted to permanent insurance. Answer: B. It builds cash value over time. Explanation: Term life insurance does not build cash value, option B, which is a hallmark of permanent life insurance products. The primary characteristics of term life insurance include a death benefit paid only during the term, option A, low premiums compared to permanent insurance, option C, and options for renewal or conversion, option D. Question 19. Tax implications of life insurance. Which of the following statements regarding the taxation of life insurance death benefits is true? A. Death benefits are generally subject to federal income tax. B. The cash value of a policy accumulates tax-free during the insured's lifetime. C. If the policyholder transfers ownership of the policy, the death benefit becomes taxable. D. Estate taxes are not applicable to life insurance policies. Answer: B. The cash value of a policy accumulates tax-free during the insured's lifetime. Explanation: The cash value of a permanent life insurance policy does accumulate tax-deferred, option B, meaning taxes are not owed until the money is withdrawn. Death benefits are generally not subject to federal income tax, option A, and transferring ownership can lead to tax implications if the transfer is not structured correctly, option C. Estate taxes may apply to life insurance policies if they are included in the policyholder's estate, option D. Question 20. Underwriting disclosure requirements. What must an applicant disclose during the underwriting process for a term life insurance policy? A. Only previous insurance claims. B. Any known health conditions and lifestyle factors. C. Their personal opinions about insurance companies. D. Their financial status and income level. Answer: B. Any known health conditions and lifestyle factors. Explanation: During underwriting, applicants are required to disclose any known health conditions and relevant lifestyle factors, option B, that could impact their insurability. Previous insurance claims, option A, may be relevant, but the emphasis is primarily on health. Personal opinions about insurance companies, option C, and financial status, option D, are typically not required disclosures during this process. Question 20 on policy provisions and options. Which of the following policy provisions allows a policyholder to continue their coverage without having to pay premiums if they become disabled? A. Grace period. B. Reinstatement clause. C. Waiver of premium. D. Non-forfeiture option. Answer: C. Waiver of premium. Explanation: The waiver of premium provision, option C, ensures that the policyholder does not have to pay premiums during a period of total disability, allowing their coverage to continue. The grace period, option A, allows a limited time for premium payment after the due date before the policy lapses. The reinstatement clause, option B, pertains to restoring a lapsed policy, and non-forfeiture options, option D, refer to options available to policyholders who stop paying premiums on permanent policies. Question 22. Consumer protection laws. Which of the following best describes the purpose of the Alabama Department of Insurance's consumer protection laws? A. To eliminate all insurance-related fraud. B. To ensure consumers receive fair treatment from insurance companies. C. To regulate insurance agent commissions. D. To promote only state-run insurance programs. Answer: B. To ensure consumers receive fair treatment from insurance companies. Explanation: the purpose of consumer protection laws, option B, is to safeguard individuals from unfair practices by insurance companies, ensuring they are treated fairly and informed of their rights, while eliminating fraud, option A, is an objective it is not entirely achievable. Regulating agent commissions, option C, is not the primary role of consumer protection laws, and promoting only state-run programs, option D, is not accurate, as consumer protection laws apply to all licensed insurers. Question 23. Types of term life insurance. Which type of term life insurance policy is designed to provide coverage that decreases in value over time, typically used to cover a mortgage? A. Level term. B. Renewable term. C. Decreasing term. D. Convertible term. Answer: C. Decreasing term. Explanation: decreasing term insurance, option C, features a death benefit that gradually decreases over the term of the policy, making it suitable for debts such as a mortgage that decrease as payments are made. Level term, option A, maintains a constant death benefit. Renewable term, option B, allows for renewal at the end of the term without underwriting. And convertible term, option D, enables conversion to a permanent policy. Question 24. Underwriting considerations. Which of the following factors is most likely to lead to a higher premium for a term life insurance policy? A. Being a non-smoker. B. A family history of longevity. C. A sedentary lifestyle. D. A regular exercise regimen. Answer: C. A sedentary lifestyle. Explanation: a sedentary lifestyle, option C, can lead to health issues which are considered high risk by underwriters, thereby increasing premium rates. Non-smokers, option A, typically benefit from lower premiums, while a family history of longevity, option B, is favorable as it suggests low mortality risk. A regular exercise regimen, option D, is also seen positively by underwriters. Question 25. Death benefit payment options. What is a common reason for a life insurance policy to be contested during the contestable period? A. The insured was not a resident of Alabama. B. The policyholder changed the beneficiary after purchasing the policy. C. The insured omitted information about a prior health condition. D. The insured paid the first premium late. Answer: C. The insured omitted information about her prior health condition. Explanation: during the contestable period, which typically lasts for 2 years, insurers can contest claims if the insured did not disclose pertinent health information. Option C. Being a non-resident, option A, does not invalidate a policy. Changing the beneficiary, option B, is permitted under the terms of the policy, and late payment of the first premium, option D, does not usually provide grounds for contesting a claim. Question 26. Policy riders and their use. Which rider would be most beneficial for a policyholder who wants to ensure that their children are protected under their life insurance policy? A. Accidental death benefit rider. B. Child rider. C. Guaranteed insurability rider. D. Waiver of premium rider. Answer: B. Child rider. Explanation: the child rider, option B, provides coverage for the policyholder's children, ensuring they have life insurance protection at a low premium than purchasing separate policies. The accidental death benefit rider, option A, provides additional coverage in case of accidental death, but does not cover children specifically. The guaranteed insurability rider, option C, allows for future purchases of additional coverage without medical underwriting, while the waiver of premium rider, option D, provides premium relief during disability. Question 27. Tax treatment of cash value. Which statement accurately reflects the tax implications of cash value accumulation in a permanent life insurance policy? A. Cash value growth is subject to income tax each year. B. The policyholder pays taxes only upon withdrawal of the cash value. C. Death benefits are taxable to the beneficiary if cash value exists. D. Cash value is not subject to any taxes during the policyholder's lifetime. Answer: B. The policyholder pays taxes only upon withdrawal of the cash value. Explanation: the cash value accumulation in a permanent life insurance policy grows tax deferred, meaning it is not taxed while it remains in the policy. Taxes are only due when the policyholder withdraws cash value, option B. The death benefits, option C, are generally tax-free for beneficiaries, regardless of cash value, and cash value is not entirely free from taxation, option D, since it may be taxable upon withdrawal or if the policy lapses. Question 28. Regulatory requirements. What is a primary requirement for an insurance agent to maintain their license in Alabama? A. Completing an annual ethics training course. B. Selling a minimum number of policies each year. C. Meeting continuing education requirements. D. Participating in a state insurance board meeting. Answer C. Meeting continuing education requirements. Explanation. To maintain a license in Alabama, insurance agents are required to complete continuing education, option C, to ensure they remain knowledgeable about current regulations and practices. While ethical training, option A, may be part of those requirements, it is not the only condition. There are no specific sales minimums, option B, or mandatory participation in board meetings, option D, for license maintenance. Question 29. Understanding underwriting processes. Which of the following is a key component of the underwriting process for term life insurance? A. Conducting a financial analysis of the applicant's assets. B. Reviewing the applicant's medical history and lifestyle choices. C. Assessing the applicant's occupation and hobbies only. D. Requiring a credit score check before approval. Answer B. Reviewing the applicant's medical history and lifestyle choices. Explanation. Underwriting involves a comprehensive review of the applicant's medical history and lifestyle factors, option B, to determine risk levels, while a financial analysis, option A, may be conducted in some cases. It is not a standard underwriting requirement. Assessing occupations and hobbies, option C, is important but not the sole focus, and credit score checks, option D, are generally not a part of the life insurance underwriting process. Question 30. Ethical considerations in sales. If a life insurance agent misrepresents the features of a policy to close a sale, which ethical guideline have they violated? A. Transparency and disclosure. B. Fair treatment of clients. C. Accurate representation of products. D. All of the above. Answer D. All of the above. Explanation. Misrepresentation of policy features, option D, violates multiple ethical guidelines, including transparency and disclosure, option A, which requires agents to provide clear information, fair treatment of clients, option B, ensuring clients are not misled, and accurate representation of products, option C. Such practices are deemed unethical and could lead to disciplinary actions against the agent.